Monday, 6th of December. Yes, it is the final month of what has been some year. This is the time when content creators dust off their end of year best of lists and everyone looks ahead to next year with misty eyes, declaring themselves 110, 120, nay 150% committed to this space and all the new friends that they have made. After the COVID transmission accelerator, otherwise known as NFT.NYC, the Gush has been out in full force again at Art Basel Miami. The Gush normally arrives pre-warmed and carefully prepared to offer a douse of soul-hugging, but Bitcoin rises from far icier northern waters, and Godzilla Judy graced us with an almighty punch as the market vomited to the tune of 14%. The crypto market cap swan diving from $2.6 trillion to $2.07 trillion, and it is back at it this morning as we write this. $570 billion or so gone. The reasons for that, plus a quick look at the FUD surrounding Sushi Swap, coming up after this message from our sponsor. DeFi users, you no longer need to pay expensive and unpredictable interest rates on your ETH loans. Liquity, a decentralized borrowing protocol, allows you to borrow against your ETH interest-free. Loans are paid out in LUSD, a USD-pegged stablecoin, and need to maintain a minimum collateral ratio as low as 110%. To learn more, head over to liquity.org/Defiant to get started and get the most out of your borrowing needs today. So hey, did you get nailed by the market crash? Of course you did. Anyone with skin in the game in crypto did. That's the way this game works. But does it have to? We actually did a whole stream about how to prepare for moments like this back on October 15th. But did we manage to persuade any of you to put some contingency plans in place? Let us know in the comments if you did. Now, you see, I'm not a genius. We didn't predict the drop. We just know that they happen, and we know how it feels to be stuck on the wrong side of the move. If nothing else, DeFi's greatest appeal is probably the range of tools it offers to deal with moments exactly like this. But what actually caused the drop? Well, we can probably look to three main factors. Firstly, the Fed. Now, the Fed has been talking tapers in its bond buying as it looks to bring rates above zero. But on Friday, there was a new November jobs report, and it was disappointing, which prompted a rally in stocks as investors seemed to believe this would signal a slower taper rate. Louis Navellier sounded a warning that the US Federal Reserve's tapering could burst the Bitcoin and crypto bubble. He also said that the Fed's tapering should create a correction in risk assets, of which Bitcoin is a part. Over to you, Michael Saylor. He also warned that Bitcoin's price could drop below $10,000. Now, I can hear you scoffing. But there is no harm in modeling that scenario for yourself to see what you would do. Now, another factor is clearly COVID. OMICRON is with us now, and we know how devastating the pandemic can be on everything. Uncertainty surrounding the new variant's severity and the efficacy of vaccines, which is still to be determined, also has investors retreating to less risky pastures. The holidays are also soon upon us, and traditionally we can expect a certain amount of de-risking at this time of year. But I remember 2017 and the insane December, which was unusual for so many reasons, but the way it basically catapulted FOMO and speculation through into 2018 was basically like nothing we had ever seen before. Now, if crypto Twitter is to be believed, this drop is simply the launch pad for a similar run, perhaps slower and larger if you buy into the super cycle theory. But Christmas is Christmas, and gains is, well, gains.
Another major catalyst to consider is our old friend Evergrande, which is once again coming dangerously close to defaulting on its debt payments. Having made 3 last gasp coupon payments in the past 2 months, Evergrande is once again reaching the end of a 30-day grace period with dues totaling $82.5 million. The knock-on effects of the Evergrande situation will be hard to escape for just about everyone.
Now, I did notice that according to DeFi Pulse, TVL in DeFi on Ethereum actually ticked up sharply after last week's drop. Stablecoins are a refuge. Stablecoins are also the backbone of DeFi, and as ever, we're looking forward to seeing if DeFi is resilient enough to provide a strong option for capital during a protracted downturn. Now, in other news, Sushi has been hit by wave after wave of drama of late, with accusations of backroom bickering, political infighting, and so much more. Last night, Sushi posted an official statement on Twitter regarding the offboarding of a formerly central figure at the protocol, AG. Now, the statement cites a pattern of unprofessional behavior, including denigrating tweets and leaking FUD to news outlets. According to the statement, all attempts to resolve the situation failed. AG herself responded in the customary fashion, with screen grabs supporting her claims that the statement is misleading. Nonetheless, it's been a trying few months for Sushi with the departure of OMICRON, with many believing Maki was actually forced out. Bento Box creator Boring Crypto posted another damning thread over the weekend, accusing CTO Joseph DeLong of being little more than a Twitter shitposter and alleging yet more shenanigans behind the scenes. Taking a step back here, a few things are pretty clear, and it's not isolated to Sushi here. Decentralized team management is extremely hard. Keeping disparate team members from all over the world aligned needs a lot of things to go right, and that rarely happens. There's also an awful lot of money on the table here. The stakes are incredibly high, and many have probably been working way too hard, over-investing emotionally, and now, as we reach the climax of a monumental bull season, all of this is coming to the surface unpleasantly. It's a pattern that repeats over and over again. If you do your history, go and look at what happened with Bitcoin. It is so political. There's so much money at stake. It just gets nasty. Now, Sushi have accomplished an enormous amount in the short time the protocol has been around, but
the light that burns twice as bright burns half as long, and you have burned so very, very brightly, Roy.
Much to ponder. But I will say this. Don't air your dirty laundry in public. Don't do it on Twitter. There are better ways to do that. We've also covered so many protocols and DeFi products that should be able to shield you from these kinds of market movements. Go back and watch them. It should be there on the channel. Tomorrow, we'll be covering delta neutral strategies in DeFi to do exactly that, looking at them on Terra as well as on Ethereum. But for now, try and have a great week.